Hello to all traders and welcome back to another market review brought to you by Orbex. So yesterday's CPI data was pretty much priced in. Year on year we had an uptick of 0.1% to 2.7% from 2.6%. So not really too much in a big shuffle. We knew that we weren't really going to get to the Fed's magical 2% target by the end of this year. And with that being said, because the market the labour market especially is doing okay in America, then we will probably be seeing a fresh rate cut of 25 basis points at least in the Fed's meeting next week. So that will be the final one of the year. So it has been a bit of a roller coaster ride for the Fed this year, and going into 2025 with Donald Trump having another 4-year term in the White House. We'll see if they come to terms with the fact that we could see more fresh rate cuts, or will the Fed pull back slightly? Well, let's just take a look at the dollar and the gold charts, because the dollar didn't really react too much, but the gold, or the yellow metal, has had quite a bit of a spring in its step since hitting a bottom just above the 2600 handle. Now, when we fell through the 2600 level, we did think that we could be seeing another spiral sell-off. I'll just mark that out on the chart just quickly here. So we did see quite a big move. We saw a move right down to the mid to lower 2500 range. So that was quite a big deficit from the record peak not so long ago. But since then, as you can see, we've held the 2600, very, very firm support, as you can see on these spike here, and then we've had a lengthy consolidation before a nice bull run, which has led us above 2700, most importantly. So if we do hold above 2700, it's a confirmation that we could see another move to the upside. Let's just bring it onto the 4-hour chart intraday, because we've got a lot of traders that are looking to capitalize on these moves. And as I said, we're just seeing now that price action is moving a little bit to the sideways action at the moment, but holding, very, very importantly, holding 2700. So with that being said, we are now looking at the previous levels that we had not so long ago at the back end of November, just about 3 weeks ago. We're just seeing now price action testing that particular area where we have another leg higher, another push higher. We'll have to wait and see. However, it's looking good for bulls at the moment, because the directional bias is moving higher at least. So after, as I said, a lengthy consolidation, we were waiting for a breakout to the upside or downside, but thankfully, well, for bulls, for buyers especially, we were seeing now more of an impetus to the upside. So let's just take a look on the DXY index. As I said, not too much of a change on the dollar. It was pretty much priced in the inflation data, so we were seeing now price action starting to move a little bit better, and now we're just waiting to see obviously got PPI data at the end of the week, but the all-important Fed decision next week will be the major, pretty much the last major piece of fundamental news to affect the dollar markets going into the new year. Don't forget, we could have a Santa rally going on, this New Year phenomenon where stocks seem to start moving higher, and in essence it could push equities and the dollar even higher as well. But we'll bring you that information a little bit closer to the time. It's the 12th of December now, got a couple of weeks to go until then. So let me know what you're trading on, what you think is the path of the dollar and gold going into next year. Will there be any more shakes up surprises from the Fed? 25 basis points is expected to be the next cut, but will that actually come into fruition? Will there be no cut at all? We'll have to wait and see. But I don't think the Fed will rock the markets too much going into next year. But who knows? We'll bring you all the latest in the technicals and fundamentals as they come. So stick with us, stay ahead, trade responsibly, and we'll speak again next time. Bye for now.